All right, guys. Today we're going to get into a strategy that I have briefly touched on in the past, but not really explained super in detail. And what this is an attempt to peer into what the market makers, swap dealers, people providing liquidity to markets, institutional traders, basically the people that actually make money in these markets. Where are they placing their orders? Well, what I have are different lines, and these lines are connected to the different times where the different stock exchanges around the world open. Now, I'm sure many of you trade the United States session, the US session at 9:30 a.m. in New York time, 8:30 Central Time. You know, I know futures is in Chicago basically, so some of you look at it as 8:30, but it's really 9:30 New York time. What when the stock market opens, a huge amount of volume comes in. That volume can be used as liquidity, correct? Now, I don't really mark out the 9:30 open because it's usually pretty obvious where it is. If you scroll back, I bet you can find the 9:30 open in about 1 second with usually the highest volume candle in the morning. But the thing is there's different opens. There's also the 8:30 open when there's often news, but also Fedwire T+2 cash settles from trades placed 2 days before. It settles at 8:30 a.m. Okay, that causes liquidity to come into the market. Now, think about this. What about all the other stock exchanges around the world? Traders in those countries may be trading their own stock exchange, but all the major indexes in the world are connected, and they're interrelated. You know, when one moves a lot, the others move a lot too. And think about this, since CFDs are really big nowadays, there's people trading NAS 100 and all that kind of stuff, right? US 100. The movements that those CFDs experience from their liquidity will have an effect on the price of this actual asset, right? Because think about it, the big boys that are running the show, they're going to want to know where traders are placing their orders, whether it's on a CFD or not. Right? They want to know where traders are betting on. Okay? So those countries, there's traders betting on the US 100, NAS 100. When those things have a lot of volume, it impacts the price of the NASDAQ. You might think it's not supposed to, but that doesn't matter. It does. Okay? So, of course, more so the NASDAQ futures impact the prices of those CFDs, but to say that those CFDs can't impact the price of this with their volume is not true. Right? Like that volume is going to be taken into consideration by the people who move these futures. You see what I'm saying? So anyway, in those countries where those other traders are, there's also liquidity. So at 8 o'clock p.m., an Asian country opens. I forget exactly which one. I don't just remember them off the top of my head, but one of the Asian countries opens at 9, I believe 9:25, no 9:30. 9:30 p.m. A stock exchange opens, and then another one opens at right around, I believe it's a little bit before midnight. Yeah, 11:45 p.m. Anyway, these are when these stock exchanges open, and as you can see, they actually get utilized as liquidity. So as price moves away from that open, once it comes back, there will become a liquidity sweep. Right there, you see? Now, of course, it's not going to be perfect and nothing works every time, but you will catch big reversals at these levels. Now, these indicators for me can only go back about 2 days, so I can't show you previous levels other than 8:30. But trust me, this kind of stuff happens very frequently. So as you can see, taking a short position with a tight-ish stop right back at that open here would have worked well. This one, price trades away from it, so going long when it comes back to that price level would have worked out well. Now, you know, when you're bouncing between levels, it can get nuanced. You might have wanted to take your profit on this one there, maybe even try to go short. That wouldn't have worked well. It is what it is. It doesn't work every time. That's why keeping a tight stop and then maybe going for a big target is smart. Okay, and again, it's not always perfect, but I can show you a little bit into why it isn't quite perfect. As you can see here, boom, goes through it, goes through it, goes through it. Why? The institutions can't make it too obvious, so sometimes they have to obscure that these are important levels, but eventually price will react to these levels, or the next day it will react to levels. Okay, but why here does it trade up but reject before even getting to these levels? Well, how about this? Let me show you something. I forget how to do this. I need to pull up multiple charts in one picture. They changed the whole... oh, I'm covering it. That's why. There we go. Okay. Let's pull up two more charts, okay? Now let's look at them. I think my settings might be a little weird, so it could be... Okay, my settings are a bit weird. It's like auto doing stuff. Hold on. Time, date range. Just turn that off. Okay. Yeah, it was like it tries to sync them, but when you're trying to sync different assets, it's not. It doesn't look pretty. So sorry. Just bear with me here for 1 second. Where is the price on this? There we go. Okay, so this is. Oh, this. Oh, it has different. Okay. Hold on. I see what I have to do. Sorry, I should have had this done beforehand, but just gonna save, override it. Okay. Yeah, I didn't realize it had a different template on the same thing. Now here we go. Okay, so I know these windows are a bit smaller, so but why did it reject here and here? As you can see, in this on the NASDAQ, it traded away from this, but never went back up to the 3 a.m., which is London open, I believe. Or no, is that Europe? No, London is 4 a.m. Europe is 3 a.m. So the Europe 3 a.m. open, it never went back up there. But as you, so how would you know to short from here? Well, if you were watching the ES as well, you would see that on ES, it did trade back up into the liquidity from the 4 a.m. open and then begin rejecting. And I don't exactly remember what happened on the Dow Jones. See, it was a little bit different. It actually bounced off it to the upside for a bit, right? But then also these levels for Dow later on after 6 a.m., which is like down here somewhere, this rejection, I believe it's 625. So yeah, this rejection right here on the Dow Jones, it was actually reacting to these liquidity levels again. Okay, so it's you can't just look at the one asset and expect it to work. Okay, it will work sometimes, but you have to watch all three of the indexes. And honestly, if you have the monitors for it, I would watch all of this, like watch all the stock exchanges from around the world. Like look at the Nifty 50, look at the, Hang Seng, look at the Japan one. I don't know how to say it right. Nikkei, sorry, I probably butchered it. The Nikkei. Okay, look at all of them. Have the same exchange opens from around the world plotted out on all of them. Monitor all of the indices from around the world. Right? US gets 3 indices because it's such a big country, but all the other countries usually just have like basically one major index, which is all you need. But if you can plot all the indices from around the world, and I mean, if you're really, got a high perceptual speed, or if you got a team of traders, you can put up all the Forex pairs and all that and look at the same levels. And, commodities, you can look at crude oil, gold, silver. You could be looking at all of them with the same levels and see what's reacting to what. Okay. Now, I think it could take years to get to a level where you can monitor all of those things. but I would at least start out looking at the NASDAQ, the S&P, and the Dow Jones futures and seeing when there's a rejection from one. And it could be rejecting on this one, but you could trade it on the NASDAQ, right? I would say probably the highest probability is one where if it happens to react from all three at the same time and it actually respects the levels on all three at the same time, then you've got a pretty good trade opportunity coming on, right? As you can see, look, this blue line is 8:30 Fed wire open. It falls just short of actually touching it on the NASDAQ, or maybe if, yeah, like one tick, or maybe it did touch it. Let me see. I think, no, it didn't. It missed it by, I think, about a tick, or maybe 2 ticks. But anyway, as you can see, it clearly found liquidity from that Fed wire open level from the previous day. Now, I don't know what it's doing here. I think it was doing something a little bit different. Oh, that's the old, yeah, this one. Okay. So as you can see, NASDAQ's actually stronger in this chart from overnight that's happening right now with Sunday, reacting to that. Here, this one, wait, do I have my time wrong, don't I? I have my time wrong. Wait. No, I don't. Yeah, so okay. Okay, so I see what happened. So on ES, it actually managed to touch the 8:30 level earlier in the day, and it did react to it, as you can see right there. See, liquidity sweep. But NASDAQ still wanted to go for its level, so then ES sold off further, right? Let's see what Dow Jones was doing. As you can see, Dow Jones also fell kind of just short of actually touching that level, but you can see it's gotten into that area. There's a reaction. But again, that was early, right? This one, it happened earlier. This one happened early in the morning. This one happened later. And this one happened like about in between, right? Or no, actually about the same time. But as you can see, so that's the reason why it's kind of tricky, is they're all kind of influencing each other. And this does tie into some ICT stuff, because he does talk about how to watch all three of these and how one leads the other, that kind of stuff. But he doesn't really explain well what to look for or when they're going to really reject, right? So I hope this is opening your eyes to what we're going to be focusing on from a day trading perspective in this channel from now on. And once I have enough subscribers that proves to me there's enough people interested in what I'm teaching, then I'll make like a free Discord, and in that Discord we can get more personal and get more committed to trying to really trade this kind of stuff. And then we could have, multiple people. We can all have our eyes on these things at different times of day and stuff, and we can start helping each other out to pinpoint and identify good trades, right? So that we can all win together. But so I hope this really helps you out. I'm not going to go through all the times, but if you just look on Google, just think about, just take the top 10 biggest countries in the world with the most powerful economies, with the most well-known stock indices. Okay, I'll try to list them off the top of my head, but what kind of opens you're going to want? You're going to want US, you're going to want London, you're going to want Europe, you're going to want China, you're going to want Japan, you're going to want Hong Kong, and you're going to want India. Okay, off the top of my head, I would say those are the most important. Some lesser ones that you could also put on your, if you want to, I wouldn't say there's as much liquidity, but you could do Australia, South Africa, Brazil, maybe Mexico, if Mexico has a different open than America, I forget. Oh, and Canada. Okay, you could also look into some Scandinavian countries, or you could do I don't know, maybe they're the same. Are they the same time as Europe though? When they open? I don't know. See, some of these countries overlap and I don't know them all off the top of my head, but the first ones I know labeled are the most important. America, London, Europe, China, Japan, Hong Kong, India. Okay? You could also maybe put Russia, but Russia is kind of a different thing since there's kind of a trade war going on with Russia, obviously. So I don't know how, but I mean, if I don't even know how their stock, I honestly don't know much about Russian stock exchange stuff, to be honest, because like they've been kind of, I mean, I'm not going to try to get too political here, but like Russia's getting, the UN and the US is fighting a proxy war through Ukraine and all that shit on Russia. I'm not like necessarily a Russia sympathizer, but I also don't hate them like everyone hates them. Everyone thinks Russia's this big bad guy. No, the UN's just trying to take over Russia. That's what's really happening with that whole thing. Okay? And so, but that does get reflected in the financial markets, and there are financial trades you can make based off of the news from that war. Obviously, there's also Israel and Iran having their issues, which have been brewing for a long time. That stuff's going to influence markets as well. But obviously, the big picture here is it's not so much just which war is happening or whatever. It's really about where's liquidity. Liquidity is when the stock exchange opens, because that's when the biggest amount of gamblers come into the market, and that's where the biggest amount of losers can potentially be. So the levels that are near or at where those gamblers are entering into the market is where the fish, that's to the big institutions, that's probably like shooting fish in a barrel, right? So we're looking, where are the fish in the barrel, right? That's what we're going to look for together at this channel, okay? So I'm going to end this video now, but I hope that, it wasn't like perfectly polished or anything, but I hope this is going to show you what I'm looking for as a trader, and that down the road a little bit, if I make a Discord, we can start working on this together as a group and identifying this stuff, trying to make plays together, right? We can actually win together, right? This isn't going to be one of those other channels where people are trying to, I'm trying to sell a strategy, do some sort of, try to take all your money and stuff, giving you a fraudulent strategy. No, here we're actually going to focus on making profitable trades and becoming profitable traders. And we're going to do this together. We're going to figure it out, okay? And we're going to help each other to figure out all the nuances of what I'm unveiling to you guys here, right? Because I don't know everything. But I did figure this out, okay? Nobody taught me this. I figured this whole thing out about the different stock exchanges, okay? Nobody told me about this. So I do kind of credit myself with that, but just because I figured that out doesn't mean that I'm going to see everything there is to see about it, right? Everyone has a unique mind, and so it's going to take multiple heads coming together to really make this work, okay? So anyways, take care, guys, and I'll see you for the next video. All right, thanks for watching and take care.